Welcome back. The market is closed. Still a very bearish market. The 20 share index, the benchmark NSE 20 share index, closed at 2,543 points. It seems that it's inching closer to below 2,500 points, which will be the hallmark of market bearishness, Sarah. Yes. But on the top trade, you also seen top performance CIC insurance up 9%. You had a sell recommended on CIC. Generally, what is it about insurance, the insurance business that makes you have a sell recommendation on CIC?
So for the insurance industry is currently struggling.
Yeah.
And we've seen...
They're bleeding money.
Yes, exactly. And so we've seen the claims increase. Yeah. And so that tends to be a concern for us. Their income revenue is not growing as much. Yeah. And so for that reason, I
generally agree with you, because I also spent time looking at the insurance companies and the performance, and my concern has always been the underwriting quality is so poor, and you could see that in the claims. The volume of claims is quite significant. But let's get back to fixed income. Of course, there's an auction this week.
Oh yes.
The market is very liquid. You expect a strong performance?
Yes. So the government is auctioning a 10 and a 20-year bond. So the 20-year is a reopen. Yeah. And so for the 10-year, we see it coming in at between 11.45 and 11.7, while as for the 20-year at 12.65 and 12.85. Yes.
So it's a 10-year bond is becoming a short-term bond. I mean, you're selling a 10-year at 11%. The 10 years is a new short-term bond. I mean, this is what does it mean for banks? I mean, should banks continue buying treasury bonds?
Yields have really come down.
Yes.
And that's why I think it's actually positive, I would say, for the private sector. Yeah. Because as the risk-free rates decreases, banks are now forced to seek higher yields elsewhere, which would be increasing more lending to the private sector. And so, that's positive for the private sector.
Oh, that's interesting.
So the government has been crowding out the private sector for a very long time.
For a very long time.
Yes.
So now they're pushing them, because currently they can lend to the private sector at 14%.
13%.
Is it 13%?
Yes,
13%.
Yes.
And the tenor of the loans typically is 3 to 5 years, depending on the bank and depending on the client. So if I can get 13% on a 3 to 5 year tenor, and this 20 years is probably going to be priced at 12.65. Surely, if I'm seated in Treasury, I have no business going for the government paper anymore.
Exactly.
And also the 15-year was also the same range as the 20-year.
Yes, so the yield curve has become more flat.
Okay.
Yes, and so I think, it's risk rates are coming down.
Okay. Yes. Let me ask you, Sarah, have you considered, the conversation that's ongoing, rate cap? Of course, we have to build scenarios. It could remain as it is. If it remains as it is, then the yield curve is what we currently have, right? Yeah. What if something happens? What if they make an upward adjustment to the ceiling on lending? Maybe they say you can add 5 percentage points on top of the benchmark rate, or review the benchmark rate. Do you have a sense of what could potentially happen to the yield curve?
So if the rate cap there's an adjustment in the rate cap, that would mean banks would increase lending to the private sector, and demand for the government paper would decrease.
Okay.
Yes, and so that could probably lead to a slight increase in rates.
In rates,
a slight
because of less
shift.
Demand.
Yes.
Okay, interesting. So I think just to watch and see. But if all things hold constant, then you're saying that yields are going to come back low, and we expect to see some upside with regards to banks lending to the private sector.
Yes. Okay. But something to note is that on the short end of the yield curve.
All right. Is that 1 year and below, or 2 years and below?
That would probably be 1 year and below.
1 year and below.
Yes.
Okay.
So we've seen the yield slightly increase.
Okay.
That's mainly because government has been mopping up liquidity, and we attribute that mainly due to as it tries to support the currency. Okay. So we've seen it accepting aggressive bids in the past few weeks. And so that might continue until probably the demonetization efforts end. Yes.
So currency, I like that you said the government is mopping up liquidity to support currency. What are your views on currency? We are currently at 103. We've been getting slightly stronger based on what the government is doing. Yes. What's your outlook on currency?
So in the short term, the shilling could continue to depreciate against the dollar, mainly due to that the increased demand for the dollar.
Okay.
And that's related to the demonetization efforts.
All right.
So until at least end of September.
End of September.
Yes. And then from there, it would seem like the shilling should strengthen, because overall there's a lot of a balance of payment position is actually favorable. So
right.
our exports have actually increased, and that's
Okay.
likely to continue.
Wow.
And actually something interesting was that this year horticultural exports actually were more than the tea exports. So horticulture is actually now at the top earner.
That's interesting. I actually missed that.
Yes.
Do you have a sense where these horticultural products are largely going to?
I think the opening up of the US market is actually helping that.
Wow.
Yes. So the direct flights has actually helped that, and that's good for our current account.
Okay.
And then in terms of imports, if oil prices, commodity prices continue to decrease, that will be positive for us. So overall, year end, it could be positive.
Wow.
Yes.
So I've got to take back to fixed income, and my view is that rates are they're actually down artificially, because I look at, for instance, the fundamentals. They're still very weak. We are adding a very wide primary budget deficit, but would mean that the government will continue to depend on the domestic debt market. And the second issue is that with the fuel price adjustments on the pump prices that we've seen over the last 2 months, there's a slight chance that consumer prices could actually edge upwards in August, in Q4 and generally in Q4 generally. And that means that the low interest environment they're seeing in the market, for me, is very artificial. Are you worried that the interest rates could actually just jack up at short notice?
So with regards to inflation, I think between now and probably September, there'd be a low base effect coming into place. So we could probably see inflation increase just between now and September. But after that, it seems like, according to the meteorological department, we receive favorable rainfall, and so there is sufficient food supply. And so that should, so at least in the third quarter, inflation should remain relatively stable, probably below CBK's upper target of 7.5%. So on that end, inflation wouldn't be a concern me so much. In terms of now the demand for government paper, I think that remains. In the interest rate cap environment, there'll still be that. The private sector will demand the government paper, and so for that reason, rates could continue to go down. So it's not. I think it's more of what is happening in the environment right now than it being any artificial.
Okay.
Yes.
And my third question is what's your equity strategy for this week?
So
what did you tell clients, Damon?
Okay, so our equity strategy for the week would be more, I think we focus more on the, for value, that would be banks. Definitely value investors, banks and Safaricom is still a key pick. And then for speculative, I would say KQ. Okay,
so you still putting KQ in that speculative basket?
Yes, speculative, yes.
That's it. Thank you for having you. That's Sarah Wanga, who's the head of research at AIB Capital. Very scintillating discussions about equity strategies for this week, and obviously, Kenya Airways and speculative back. We can continue picking it. If the RSI goes below 40, it's time to buy. On the dividend side, still topping in the list is Barclays. We leave with market close statistics, and good afternoon. See you tomorrow.